Hey guys, welcome back. My name is Eric Wilson, and today I'm going to be talking about private equity real estate. Private equity real estate is a type of alternative investment. So, when I say alternative investment, I'm talking about everything that isn't stocks, bonds, or cash. So, everything that falls outside of that is classified as an alternative investment. That can be anything from commodities, infrastructure, venture capital, private equity, and real estate. Real estate's one of the more well-known alternative investments out there, and I think it's well known because you can do it yourself. You can do it actively as a real estate investor. You can go out into your market. You can find the deal. You can find the capital. You can execute the business plan. But there are limitations. You're limited by the amount of capital that you have access to. You're limited by the deals that you can find. The odds that you're in a great real estate market in your neighborhood are slim, and if you are, then there's probably a lot of competition to find those deals. So being an active real estate investor is a challenging route. It can be very lucrative, but it is a challenging way to add real estate to your portfolio, especially if you have a full-time job. And then you have passive real estate investing. So that's allocating a part of your portfolio to real estate to get the same sort of benefits that real estate has to offer: higher returns, diversification, tax efficiency. All of these benefits can be achieved through real estate, and all the different types of benefits that you get will mainly depend on how you access the real estate. How are you choosing to invest in real estate? When it comes to your options to invest passively in real estate, there are four main quadrants. You have public equity, public debt, private equity, and private debt. Now, we'll break down all four quadrants in other videos in more detail. This is just a quick overview, but today we're going to talk about how you can access private equity real estate. So private equity real estate has two main categories for investors to choose from. You can choose from what's called a syndication, which would be a deal-by-deal investment. So a group of investors come together and they say, okay, we're going to pool our capital and we're going to buy this one asset. It's usually led by one company or one person called a general partner. That person is the active investor in this case. They're the ones that have the expertise, they have the experience, they found the deal, they found the capital, they found the debt source. They've done everything to prepare the business plan, and they're bringing in passive investors or limited partners into this deal so that they can all collectively benefit from that one deal. On the other side of the table, you have private equity funds. Now, a fund is a collection of deals. So instead of just investing in one property, you'll have a general partner, that active investor that has said, okay, we're going to take down these, say, 10 properties. These 10 properties, we're going to buy them, and to buy them, we're going to pool our capital into this fund structure. This fund is going to go out and buy those 10 properties. So now all the investors that pool their capital into that fund will have ownership of those 10 properties. Very similar to a syndication. You can do them both through partnerships, LLCs. There are a lot of different creative structures and benefits to how you can structure each type of investment. But the main difference is in a syndication, you're investing in one deal, and in a fund, you're investing in a collection of deals. It's kind of like investing in a mutual fund versus picking and choosing a stock that you'd like to invest in. A lot of similarities there. Let's talk about the benefits and risks of private equity real estate. On the benefits side, you can have potentially achieve higher returns. It's a great way to diversify a portfolio. There's tax efficiency because you are actually directly owning the real estate in a lot of these cases. You are getting the private equity portion. You are genuinely being an owner of the physical real estate asset. You're also benefiting from the professional management. So instead of going out and buying a property yourself, and you have, maybe not as much experience, let's be frank, as a professional manager, you're now benefiting from a team that has extensive experience. They know their markets, they know the deals, they've done this many times before. So you're gaining those benefits by investing in private equity real estate. On the risk side of private equity real estate, you have limited liquidity, first off. So in a lot of these situations, a lot of these deals, your capital is probably going to be locked up for a set amount of time, whether that's 5 years, 10 years. It's all going to depend on the type of deal that you're investing in. A fund, syndication deal, depends on the business plan. But generally, these are illiquid investments. Your manager may have liquidity options. Maybe they'll have an annual redemption option where you can transfer shares. They'll essentially buy back your shares. But that's going to be manager by manager, deal by deal. Generally speaking, though, these are illiquid investments. Once your money's in, it's not going to come out until the deal has been full cycle. The general partners decide to liquidate that investment and you get your capital back. You also have the risks of the manager themselves is a general risk. So when you're looking for a real estate deal, you have a lot of different operators that you can go with. A lot of different large companies, small companies. You can invest alongside a smaller operator in your market. There's going to be varying degrees of experience level. There's going to be varying degrees of resources that partner or company has access to. So that's a risk. You have to really underwrite the managers and evaluate their qualifications so that you can trust them with your capital. All in all, private equity real estate is a great option for investors that are looking to allocate capital from their portfolio into real estate to get that benefits of diversification, potentially higher returns. But you just have to do your due diligence to pick your goals, set your goals, pick the right type of deal, whether it's a fund or a syndication, picking your manager, and then picking the deal with that manager to invest in. There's a lot of things that go into choosing an investment for private equity real estate, and that's why it's generally only available to accredited investors. But we'll talk about that in another video. Hope you guys enjoyed this video. Please subscribe, hit that like button, and I'll see you guys in the next video.